The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon, this being Tuesday. Thank you, Steve, for 2 great hours. Straight after my show comes the Options Hour. Then we've got Daryl Martin, you got Dave White, and let's see. Let me just double check in the break to see if we are Tuesday and Thursday. Andy's on. Okay, wow. We're all set. And then Tom O'Brien comes back at 4 o'clock till 6 to wrap up, give you all the news about the day. Probably to talk also about this coming Saturday here in the Burlington area and Boston area. There's the 4-hour workshop with Daryl and Tom, and the diagnostic trading hour is what Daryl does, and it's his program, and should be a fabulous event. And of course, it's really a terrific show. So don't forget, today at noon, Harrison Napper will be on with the Options Hour, and that's brought to you by Think or Swim. Now, there are a couple of things that I also wanted to mention. Where did I put that? I put it right in front of me before I forget. It's really important. You know how every once in a while there's this great thing here at TFNN. We have Tiger dollars that are given away. It's a Tiger dollar sale. You get a fabulous, you get a 20% bonus. In other words, if you buy something if you spend $1,000, you get 10%. You'll get 20%, and 10% of that will be donated to the One Fund in Boston. If you spend less than $1,000, you get 5%. So it's like you're getting money for nothing. That's really, where in the stock market you get money for nothing? And yeah, you get it. So please go to the front page, check it out, because we've also got just a great venture here that took a long time. I know Dave White worked extremely hard. You know how Dave does, he's our tech guru here, and he did some fantastic work in really producing a wonderful state-of-the-art. It's called Art of the Charts, great charting package. It's a program that Dave has developed. It has the butterflies, the Gartleys. If a Gartley fails, it goes to a butterfly, etc. But it also has a number of other things, scans and all sorts of things that you might want to do. I'm looking at a guy on CNBC. I saw a woman walking by. I was in San Francisco who had one of these glasses on, one of those Google innovations. I think to myself, that's fantastic. But what happens if you kind of get bumped or someone just takes it off you? What do? I mean, it's just, I'm not sure. Yeah, it's wonderful, and it's certainly state-of-the-art there as well, taking you into the future. But how distracting can it be that you're walking around, but at the same time you're looking at the prognosis of, whatever it is that you've been wanting to find out about. So let's go to the numbers. The Dow is up 46 at 15,014. Remember, I was looking for a peak D in the Dow. So let me just run through a couple of things. But first, let me show you. If you're looking at Tiger TV, Tiger One, you will see my chart on the left here. This is the E-mini, which I give my subscribers. My service is called the Opening Call. In the opening call, I had a new subscriber ask me today, just people every once in a while need to just clarify what's going on. This doesn't get sent out to you. It goes to the TFNN site, and all you do is you go to the front page of TFNN, and in that front page, what you do is you will click on the login. You log in with your email address and your password, and that takes you to your members page. And it's real simple. All you're going to do is you're going to look for under the opening call. You click on the opening call. Then you click on the Chapman charts. And from about 6:30 in the morning, sometimes it's early, but at least from 6:30 in the morning, I start sending out my charts. I send out the Dow chart. Let me show you what it is. It's this in great detail right here. This is the Dow chart, looking for leg D. We're getting leg D right as we speak. What's the premise? What's the supposition? What is the expectation of the ChapmanWave methodology? Is to get you to where? To at least a peak D. Why did I go long last Thursday morning at the lows? Because I said that's a peak B right there. You went underneath the 9-period exponential moving average, but the MACD and stochastic were holding really well. The 120-minute chart had gone to the lows of the stochastic and the MACD, and I anticipated that we would get a potential for a very strong move up. That strong move has gone from in my case, from the Dow, round about Dow 14, I think it was about 14,840, to today's high of 15,024. And we remain along in 200% along the Dow. But that isn't the issue. The issue here is the MACD is at 90% and the stochastics at 20. The stochastic is at 90%. The MACD is still very strong. Now, what I need to do is just to quickly explain that although the premise of the ChapmanWave is take you to D, and that's where you don't have to, but that's where you can expect some kind of a pullback. Sometimes it's the top, sometimes it's just a pullback. There are enough stocks that I'm looking at, and I'm not going to go through all of them because my subscribers know exactly what we're looking at, that are still looking very strong. And until I get a completion of certain indices in the waveform, I do not want to switch or take profits unless I take profits on half my position in the DDMs because I've raised the stop on one half. But the core position so far I'm still holding. Another thing is when you break out in the cup and ladle formation, and that is really important. In my ChapmanWave CD introducing the ChapmanWave methodology, I talk a great deal about this cup formation. Now, what's very important about it is when the cup and ladle breakout goes, it goes to at least a D. Where's D? It's right at the trend line resistance that I notated for subscribers. Now, see, that's where we can expect some kind of a barrier. But in the meantime, we've got certain stocks that we are only long. We have no shorts at this particular time. I am certainly looking to add shorts, but the shorts they seem to all be working very nicely. The latest ones have worked out very well so far. And all I can do is go step by step. Now, the only one that isn't working right now for me, and we anticipated that it was going to be a different kind of a position, is the position in the equivalent of the GLD. And there's a reason for that. And there's a reason for my giving a buy, but with certain conditions that have to be met. So it's down just a little bit. It was up a little bit, down a little bit. I'm expecting that there's a consolidation going up, and we'll do that as we go through the different charts. So let's go on. We've got the Dow 51 at 50,020. You've got the S&P up 258 at 1620. No, it's up 449 at 1621. And the comp index is unchanged, 33.92. Now, gold is down sharply. It's down 22 at 1445.90. So now let me do this. I wanted to show you the gold chart. Oh, I was talking about the E-minis. The E-mini, before I change the chart, I don't want to break away and then forget to come back. This is the buy from 1530.75 in the E-mini with a buy signal going to a buy mode the moment the MACD and stochastic confirmed with a price movement. This is a very strong leg C. C is continuing. It has not gotten to D, but they trade almost 24 hours a day. Now look at the E-minis. The E-minis have gone peak D. That's your expectation. The last one was a pretty sharp pullback from 1595.50 to 1576. And now we've got E/E and F/B. Why do I have that? Because if the MACD crosses positively and the stochastic holds remains in 85, it's at 89% or 85% or higher. These are the techniques that I teach in my webinars and my Master Trader series on how you can use the different techniques in the ChapmanWave methodology, the umbrella of the ChapmanWave, to constantly attempt to be on the right side of the trade. After all, there are people that have missed maybe 6,000 or more points since the 6,500s low in the Dow in March of 2009, and are still constantly shorting. There's going to be a time where it's an absolutely beautiful thing to do, is to short and hopefully be right and get a huge bunch of points. But look, you could have just bought and gone to Rip Van Winkle. You could have bought the Dow, the diamonds. I could have done it as well. We did buy the exact low on the day of March the 6th, 2009, held it for 18 months. But I did not get back in. We did have a proxy of GE for a while that gave the same percentage gain, and now we keep trying to trade the Dow via the DDM, which it says 200%, but there aren't many days where it's really 200%. It's a bigger percentage than the Dow Diamonds, and sometimes the Dow Diamonds don't really match the Dow itself because you have to have all of them going up in concert to really get the full benefit. That's the only reason why I go to the 200%, because It has the same safety factor. It gives you 200%. If you don't want to do your full amount, you go half, and that's the equivalent of diamonds. I prefer it as a vehicle myself, and the DXD is on the short side. So this is F/B in the 120-minute E-mini, only because although the MACD pulled back, the price went higher. That's a divergence. It's a divergence that becomes negative if certain factors continue to pull back. But if the price goes up, it can drag the technicals and improve the technicals so that it's a high-level consolidation. Now, I was going to say to you the GLD. I wanted to actually show you the GCM. I'm going to the M chart for the moment because that's the one that I've got notated. Look at the way you've got in the 120-minute charts. If you're looking at my charts, this one right here, I'm circling it with my pointer. Look how it went to peak E in the ChapmanWave, pulls back, has an inside buy mode going to a peak D, but underneath the 1484.80 high of the 25th of April. That can happen. Forms a rectangle formation, breaks down. Now it's forming an arch, goes to a peak E from the 1439 low, low of on the 1st of May, goes to a high on the 3rd of May at 1487, and then pulls back. What I love about the 120-minute chart is that the 120-minute chart can give you swing trades. You know, you've got this now, you've got all these beautiful techniques. You've also got the potential to get your the art of the chart pattern, which is going to show you the different butterflies and gartleys. One thing that is absolutely what I love about my 120-minute chart is that sometimes you're in kind of never land in many of the techniques that many people use, like a Fibonacci or whatever it is. In that time frame, you in never land. A shorter term time frame can give you exactly what you're looking for. But in the waveform, look, you got a buy signal that went to a buy mode, to a sell signal, to a sell mode at peak E. And now what are you doing? You're making another arch formation. These arch formations can be extremely bullish. They can be extremely bearish. It is how you read them. It's what you do with them. And at this particular point, all I can say is I'm anticipating that there is some kind of a pullback going on right now. I'll just draw it in for you, and let's just do this one second. There it goes. And it says we've already got there in a shorter time frame, but if the 1439.70 level is taken out on a closing basis, it has to snap back very quickly, the same bar almost, has to snap back into the arch formation. If it holds under it, yes, we will go lower in the gold. And so right now, very nice candle. I'm going to watch this candle closely because the stochastic's at 14%. MACD's expanding still. That's the histogram right there. I'm anticipating that there could be some kind of an attempt at a bounce right here. So let's go on. We've got bonds. No, you've got high-grade copper down 2 again at 3.28. You know, copper's not so good. And you've got crude oil down 70 cents at 95.47. And bonds are down 630 seconds at 146.10. And the dollar is at about 82.36, and I'll do the euro. We've got a question about the euro, got some other questions about the yen. I'll be back with these different currencies in a moment. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Dow's up 45, S&P's up 2.78. I'll be right back. Blink.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direxion Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion Shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and I'm just finishing up a chart right here. I had two questions actually. The first question was from a subscriber who wanted to know. Let me just see here where it is. Inbox. Right there. Okay, the question was, I'm buying the 97 June put in futures. I cannot call. Could you give your opinion? And 97, so June put. Unfortunately, I should be able to, but I can't go to my options platform right at this particular moment. What I'm looking at here, if I look at the FXY, which is the currency shares Japanese yen, of course, it does not trade 24 hours a day like the actual currency, 24, most of the day and night. But actually what we're looking at is, a chart pattern that at least gives you a very good approximation of what we'd be looking at. I'm also going to do this at the same time as I go USD JPY, the currency pair. And the currency pair has the inverse. So what I'm going to do, because although you would anticipate that the upside chart formation should be a replication of the downside chart pattern, there are times where where the result is a little bit different. There, that's what I wanted to say. So I'm going to do it as if it's being a bullish chart pattern for now, and then I'm going to do the inverse. So we'll have a little lesson in chart patterns here. If I'm looking at a potential cup formation that becomes the double cup formation, look at that. And now I'm going to do a left side, right side price time match. So let me just do that, make that red. Do it again. Make that green. What we have is that pattern in the ChapmanWave that I call the lowercase h that goes to a W, an M formation. In this case, it is the inverted Y that becomes a W formation. Now, what's really important about this is that you've made higher lows, but you've also made lower highs. And that's saying that there's a tremendous barrier, and I can understand if you look at this upside down, let's look at it upside down, that's FXY, you would say to yourself, oh man, that is going to break, and that's going to go right down below the 97, 98 low of the 11th of April. 97.98 low. And what's most important about it is that it's the same principle that I was talking about a little earlier. The bar that takes out the left side low also had better get right back in within 2 bars, preferably within the very bar that breaks down. Otherwise, you're going to go lower because it's making what was support into strong resistance. Okay, so now let's look at the monthly chart, and we're going to get the big picture. The monthly chart says, oh my goodness, this is one ugly chart. Ha ha ha, wait a minute. There's also something that says, if I make a left side, right side price time match, choosing the right bar, of course, it has to be that one right there. We could make a case, there we go, we could make a case for some kind of a low. It doesn't have to be a big deal, but just a low that says, look, you don't have to keep going down because you've already achieved much of what you wanted. The 200-period exponential moving average is at 97.27. Let me just double check. 97.27. Last month, which was just a week ago, the price went down to 97.98. You missed it by 50, 60 cents. Okay. So now we look at it and we say, that's trough C or leg C. If it goes down lower than that, this month it's leg C. Beautiful H pattern, failure pattern that went lower back in July of last year. Now it's come down. There's the candle of support, that doji, long-legged doji. Always look out for those long-legged doji with a low of 98.48. Well, we've just broken that and bounced above it. So I say to myself, okay, chart patterns repeat over and over, and that's just the stochastics flattening out at 6.7% in the monthly chart. Hey, that's not very good. And the MACD is still expanding. That's not very good. So all that I can say is that the bear market in the currency shares, Japanese yen, is still unfolding. Now we get to the interesting thing. You get to the weekly chart, and that's how you want to be able to use time frames. You want to be able to juggle, to be able to look at time frames that says, what does this mean? I'll be right back, and we'll discuss what it means, and we'll look at the euro-dollar currency, and we'll look at some other things as soon as I get back. 877-927-6648.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Dow's up 38. S&P's up 38. Yeah, the Dow is. This is the period that we gotta watch it real closely, because at this very moment we are starting to see which stocks are the ones that have underlying momentum that could overcome any shorter-term pullback. We're able to see, I'm beginning to see the rotation, the way it works. I'm beginning to see which stocks, I'm looking at one right now. Amazing. The stock. We had one absolutely fantastic trade on this. I was looking at it and I could not. It's one of the very few times that I looked at the wave count and I thought to myself, everything about this says that it's toppy, but the wave count was unclear because it was G in the daily, G in the weekly, and I don't recall seeing this exact pattern that looked like it should have been an E or an F as a G. And that's a right arm extension. What do I mean by right arm extension? I'm going to tell you right now. Right arm extension is where the technicals are failing, and the one of the technicals is fading, and one of them, usually the MACD, continues, the fast-moving average continues higher, enough to raise the prices to keep going higher until it pulls back. So the CMG is down 8 to 365 right now, but I'm going to let it be, because I do not yet have the technicals confirming that it's going to be a very deep sell. I'm expecting it will be at some point. I'm not sure that this is that moment, but it was a little surprising when I was looking at the chart patterns. Now we're going to go back to FXE, and I just wanted to show you, because I'm all about chart patterns today. Usually Friday is the day that I have a huge chunk of time, and then I say, okay, let's look at it, give more detail to it. But the FXE right now, it wasn't FXE, I'm sorry, I was going to the yen, FXY. FXE is the same pattern that we were looking at CMG. We'll come back to that in a moment. So what I'm looking at here in the FXY is that there is a chance that there is a double bottom at between the low of 98.47 yesterday and 97.98. Somewhere in the 97s, there's going to be a slide into the 97s. It might even touch 96 something. And then there could be a turn to the upside as the H pattern goes to an M. Now, let me just show you these patterns. There's a couple of things I wanted to talk about. One was in the, let me just go back to this so I can do the two things at once. FXY, and I wanted to go to USD JPY because that would be the inversion of it, EFG. Oh, man, what was the chart I was about to talk about? Smooth G. It doesn't matter. So what I'm going to do right now is I want to go back to the FXY, and I want to talk about a pattern. In my CD, introducing the ChapmanWave methodology, there's a pattern that goes from the lowercase h. It looks just like a lowercase h. If you learn to visualize it, it's just, they are so easy to see. Once you get it picked out, what happens is if it continues to break down, testing the left side low, and it can't, in fact, hold that left side low, it turns into this pattern. And eventually, that pattern stops because it just can't keep going down and down, and the arch gets bigger, and all of a sudden that arch turns into an M pattern. Tell me now, look at this, and look at this. When you're looking at these patterns, you see the H becomes the M pattern. So while it's very negative on the one hand because it keeps breaking to lower lows, the fact that it's trying to form a base is the exact same thing I'm looking at when I look at EUR-USD, that at the top, the euro, why am I looking at that? It's the yen, USD JPY, is that the dollar, US dollar, Japanese yen is trying to break out to the top. Now, this usually turns into a tremendous barrier. So I'm looking at this and I'm saying the euro, the USD JPY, the dollar, Japanese yen, 99.937. Let me just type that in so I don't forget. 99.937 is the high that has not been pierced, and that goes all the way back. This is a long time for something that's trading near the top of its range since the 11th of April, almost a month. Now look at this. Because it keeps trying and failing, it seems to me that there could be there's a possibility of one little pop-up, but then it could come down. That'll be the first time in quite a while that the yen has been able to make this pattern without holding the 9-period exponential moving average if it breaks 97. And up until now, since it broke above on the week of the 5th of October, the USD JPY has not once, has it closed underneath the 9-period exponential moving average. But this top thing here says, watch out, we could be looking at some kind of a rectangle formation. And that rectangle formation says, yep, you can pop once to the upside, and that F could turn into a G, and then we come down, because the MACD is starting to dip, but there's nothing yet negative about it, and the stochastics at 89%. My suspicion is that we're making a high-level consolidation and the exact opposite of the FXE. So here was the question. I'm about to buy puts, and I would say, yeah, I'd buy it, but I'd have, whoops, it's FX. Why? FXY. I would treat it as a short-term trade. If you're correct, if you buy it, first of all, if it goes above 90, it's at 98.87. FXY, that's the the currency shares Japanese yen. But if it breaks above, you see that 9-period moving average at 99.31. If it goes above that, it's just going to make another arch formation. It has to work for you within the next 2-3 days. It's got to break, and it's got to break underneath 98.47. And then all I would do is I'd have my position where I immediately take out something somewhere in the test of 96.32 to 90. I didn't mean 96. I mean 98.32 to 98.25. And then if it breaks under 97.98, I would have a trading stop. And then I would say, it would actually be nice if you don't have to take anything off. You just keep lowering your stop on the price, not on the option, but on the price. And if it can just go immediately down to the 97.98 level, then what I would do, I would take half off the moment it cuts 97.97. It just goes into 97.9. I take some off, and I'd keep the rest to see where it goes. That's the way I would trade it. That was a long answer. I'm sorry. That should not have been as long an answer. But I needed to show the chart patterns. Now, couple of things I wanted to look at, and I'll go to them right as soon. Oh, we've got a caller. We've got Ben in Tallahassee. Hi, Ben. How are you?
Hi, Basil. How you doing?
Very well, thank you.
Excellent. Yeah, two questions on gold. One is, do you see any correlation, with gold in the market? I know that, in the past, sometimes it's in sync, sometimes it's just the opposite. And then the second question is, in the daily, do you see it possibly forming a body of a stork leg?
Let's go to one question at a time. I just want to quickly finish up my notation of the 120-minute chart. D, E, and this is where it went to. Oh, this is what I wanted to do. In the ChapmanWave methodology, there's a technique I call the smooth peak G. What does that mean? Well, it means that when you go to a peak F, but the technicals are still very strong, yeah, there might have been an instant restart somewhere, but the chances are you've got to consider that it could go to a G and then fail. That's exactly what GLD did in the 120-minute chart. Now, what is that technique? It's a technique that I describe in my CD it's really in great detail. And what it does is it looks at, I'm trying to get it, there, Chapter 11B, the smooth peak G. And this is very important. The smooth peak G, invariably, I like when it occurs within 3 bars of F, and it almost looks like F just extended higher. And that's exactly what we got in the GLD. So for the positions that I have, in terms of the equivalent of the GLD, what I was looking at is that some kind of a rectangle formation is forming, depending on how. So I just wanted to go through that, and I'm going to go right to the daily, because I like to look at the smaller time frame, because that's going to give me a clues. That's like the rudder for the larger trend of the daily. And what's happening is that if the GLD decisively breaks under 139.30, I don't mean just it kind of sneaks underneath and goes 139.10 or 138.90. It really has to break it, and that means that it goes back to, say, this candle here, 137.45. Then I have no choice but to say, whoa, wait a minute. Is this going to turn out to be, in the end, just a large arch formation, the very one that I was talking about a moment ago in the FXY? Well, as I see it right now, the stochastics at 81%, the MACD is very strong. I just think this is a great consolidation after going from 130, 13 points higher in the. We've not had moves to the upside like this. We've had a lot of moves to the downside. So this is the first time we can see the internal strength of the GLD. Now, when I say internal strength, all I mean is short, maybe I can call it kind of intermediate term-ish. And the reason being that the climactic volume spike, now I've started to call it a new name, and I was very comfortable with the name this morning, and now I can't remember what it was. It just nails it exactly. Climactic volume spike. That almost doesn't. No, it's a climactic low bar volume spike. So when it goes, you look at the trading of the 15th of April, where it went down to 130.51, huge volume. In my work, and I had a question as to why would you want to go long something like this when you are bearish looking out? Because the candle of last month was exactly the ChapmanWave Roman candle, which I had identified way before in the GLG, in the continuous contract of gold. Why would you want to go long? You know, I'm not going to say it's an experiment. I don't want my subscribers to experiment with my techniques. We want to know that it's a technique. This is a technique that I feel very comfortable with. And it says that if you get that volume spike, this is one of the few times that I actually use volume purely as volume rather than unbalanced volume. And it says that you should have a trade that can take you, it doesn't give you the height, but it does give you the duration. It says between 28, 30, 38, and maybe even 52 bars, not yearly. It's only good for shorter term, up to daily, and sometimes weekly. And that says you can rally and make a very long arch formation, an upside down bowl formation, and you could have a trade that gives you a percentage gain, not necessarily a big point gain, and that's really what I'm looking for. So if you look at the GLD, what I'm anticipating is that it's somehow or other, it's going to worm its way up. I would have to just say, if it breaks 135.85, I have to consider that H formation, and it can just keep doing that in a much lower trading range. But the issue here is that it should not go to 130.51 for quite a while. Quite a while meaning 24 weeks, 4 times 5, for maybe even another month, before it starts to curve down and come right back into the 134, going down to 130 if it's going to do that. So I like this. I suspect that the high is going to be, and I'll only know if it can get there, if it gets into the middle of that ugly bar of the 12th of April. So that would put it around about 145.50. That's very high. That's 6 points higher. But if it can get there, then I'm looking at a chance to test that high bar of 148. If it's only able to break above 143.43, that's the high of the 26th, and then it starts to make another cup formation, I'm out of this trade, because all I'm doing is saying, hey, wait a minute, the H is going to go to the M pattern that we just saw, because patterns repeat over and over, and I'm always fascinated, because sometimes you can get a stock in an auto company or a biotech company and a gold, and the pattern is exactly the same, even though they have no relationship whatsoever. So patterns repeat, and I'm just saying that the MACD and stochastic are very strong, still strong even with a pullback today. I suspect there's going to be a rally. I don't think it's a rally that I want to trade any gold stocks at this particular time. There might be one or two that look like they got a nice percentage gain. I'm looking at gold, and I want to trade gold. So it's an ETF for gold that I'm trading. So does that answer your question? Oops, I think Ben just disappeared. Oh, I'm sorry, Ben. I forgot that sometimes Ben doesn't always have a very good connection. So Ben, you can hear it on the archive, but basically I'm going to just sum it up. If now you're just quickly listening to us on your either on the web, and that says rectangle formation forming here. It needs to break. GLD needs to break. That's the spider. Gold Trust needs to break above 143.43. But it needs to do it with a point higher, like 144.43. If it just sneaks above, it's just making an H formation that's going to go to an M formation. At that point, I'm throwing up my hands and I'm saying, I'm out of here. I'm looking for an opportunity to buy the DZZ. That is 200% short the GLD. That's probably what I'm going to do. But the weekly chart is saying I'm slowly building a little strength to test the 145.29 9-period exponential moving average. I'll be right back. Basil Chapman, Dow's up 39, S&P's up 358.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. Just real quick, I'm getting to the EUR-USD because there was a question about that. Now, the euro-dollar is in a rectangle formation. And did I do it? I don't know. I spent so much time on it before. Right now, it's just holding very nicely. 9-period exponential moving average at 1.3083. That's like a magnet. The MACD is okay. Still hasn't crossed negative. Stochastic's not good. It's at 50%, but the price is holding well. My suspicion just at this particular point is that it's still stuck, like bonds are stuck in this little trading range. So I think that the euro is stuck in a trading range right now. But 1.3038 is really the big deal, the 200-period exponential moving average support that is held, and then it has resistance, but mostly it's held it. So that's going to be key. If it closes under that, then I have to look at the weekly and say, if the weekly closes in the 1.29 to 1.28 this week, that's not going to be good. Right now, I just think it's a trading range. Now, American Express. Question about buying puts. Most importantly, I've got this as a PC in the daily, and I have it with the technicals still very strong. I think you have the right idea because American Express, AXP trading at 70.07 up 1, looks to me like the monthly chart is actually very strong and it's broken to all-time highs. 65.89 was the high back in 2007. 9.71, $9.71 was the low back in March of 2000. Was that March? Yep, March of 2000. Now it's trading up in the 70.07 area, having hit 71.09. So 71.09 tells me we should go to above 71.10 or higher. And at that point, what I was just looking to see, 67, 70. I'm going to suggest that I believe it's trading at 36 cents right now, the put. If you want, just in case you miss it, I suppose you could get one or two right now. But from the way you've asked the question, I think you're looking for something pretty serious to the downside, certainly filling the gap and then going lower. My recommendation is, if you can have patience, the moment it goes above 71.09, if it does that, I suspect it's going to. If I've got a peak C, I'm expecting a peak D. If it goes above that, I would look at 50 cents on the 72.50 put, or something in the 21 to 18 or better, 15-cent area in the 70. I'm trying to look at it as if you can get the very best price. You've got May, you've got until, this might quickly before we run out of time. We've got, what, another week, I think? I'm just absolutely at a loss here as to the date, the Fridays, for options expiration. All right, I haven't got, I have. There it is, Friday. May will be the 10th. Oh, you've got until next week, the 17th. I would say have patience. If you want to just nibble here, that's fine. It's only 36 cents, but I don't like to say only this, only that. That adds up. So start a little position here, but expecting that it's going to pull back. If I'm right, it could pull back if it's by Monday, that could actually drop to 18 cents or 17 cents. That's actually where I think it's best. My guess is if you were looking out, I would prefer to be looking at June, but you're not going to get the same bang for the buck. The bang for the buck is if it absolutely works for next week, and I think it might with the options expiration coming up. So, once again, I'm anticipating that in the 120-minute chart, there's a rectangle formation. I think we sneak above 71.09, and that's where you get leg D in the daily. And at that point, I don't know if you want to wait for a turnaround, but you can actually start a little position for next week in the options, the 70 puts. So let's just quickly sign off with one thing that as we're going out, don't forget to stay, don't forget to go to the front page of TFNN. You've got all these fantastic bonuses and things coming up. Saturday here in the Boston area. Leg D has just begun in the Dow. I'm waiting for other things. We're up in the resistance area. I think we're getting really near to some kind of pressure point where we bump into resistance. So